Okay, just mute your mics. Okay, that we cannot disturb in the session. When you have any query, you can unmute yourself and then you can ask the query. Just unmute yourself. Mute yourself. Okay. Okay, so now it's an introduction session about the VSA education, that what is VSA, why we are using the VSA, because before all the traders, all the members, they just studying the price action, but now I increased the volume spread analysis also in this course. So this course is depend on the volume, okay, that how we can trade the volume with the price action. So the two things come in our mind, that price, in the price action we are talking on the price, and in the volume, so the one thing increased here, the name volume. Okay, what is volume and what is price? You know before the price, because you are a price action trader and know about the price, how price moving in the chart. And but here again, these are the things I will cover in the chart, that price and volume what is. Okay, so you look at this chart, it shows the trend, it shows the green candles. Green candles are the buyer's candle, red candles are the seller's candle. You know that you are experienced trader. The green candles always, when come the trend rising, it means price rising from one level to the another level. And when the red candles appear, it shows that the market is falling down. Okay, so these things, there is a price, there is a value which is trading in the market, that we always place a call option or put option, that we thinking our analysis, that this price now will rise from here, or this price now fall from here. Okay, so we know about the price. Price is a value. Okay, it moves from one place to another place to cover the distance. That is a price. Okay. Okay, Anthony, I'm going to mute you. When you have a question, then you can ask. Okay. Yes. So after that, after price, there is another thing, volume. Okay, there are two types of volume. If you are thinking that volume is a combination of units which is purchased in a due time, if these candles are the 1 minute candles, in 1 minute candles, how much volume purchased by the buyers. Okay, the volume always counted from the one side, from the buying. Okay, but in the Forex market, there are two types of transaction, the short sale and the buying. Okay, so short sale volume also counted in the market, but which volume is counted? So in the stock exchanges, the volume counted in the units, that how much unit purchased in this 1 minute time frame, where the price start from this level and close at this level. So that is a level. Okay, in this level from here to here, how many units purchased? So we are taking the analysis, or taking the information from the past candle, or past information from past these periods, that how much volume traded in this period and how much volume traded in this period. So volume is a units. Okay, but there is another concept about the volume, the tick volume. I will teach you about the tick volume, but just to clear the volume in the units. So these are the units. If we are in the stock market, there are the units can be counted in the shares of the equity, share of the underlying asset. Okay, so asset shares can be traded in the stock market, but in the Forex market, the volume is measured by the tick volume. Okay, so what is the tick volume? Here, the tick volume, if that is a candle, when candlestick goes up, the volume purchased here. When goes down, volume sold out here. Again goes up, volume purchased here. When again goes, price closed, or price stop here, again price move from here, volume purchased here. Again price goes down in the 1 minute time duration, I'm saying, just volume sold out here. Again it's going up, the volume purchased here. So the tick volume is that on every up and down, when volume purchased, it shows the data. That is a tick volume. Okay, so here, on these areas, the volume purchased. So that is the concept of tick volume. Tick volume, it means when price up and down, it shows that some units, some quantity purchased. So that is a tick volume. Okay, you can count in the candle. Sometime when the candlestick is moving, it goes up, again goes down, goes up, again goes down. If in the 5-second chart we see on the volume and the candlestick, you will see the difference here. Okay. So in the 5-second, the candlestick goes up, again goes down, goes up, or again and again going up in the end of the direction. So that is counted as a tick volume on the different up and downs in the one time period. If you select the 1 minute time period, it will give you 12 areas where the volume is counted. Okay, if you are taking the 5-minute chart and you are taking the example from the 1 minute candle, so in the 5-minute chart you will get the 5 candles of the 1 minute. Then you can consider the time where the so much volume is traded. Okay, so these are the things. So what are the main benefit of analyzing the volume? Why we are analyzing the volume? Why we are not just taking the trades on the price action? So there is the one thing here. On the volume analysis, the volume shows that where the smart money is used. The smart money, now the term comes of smart money. What is the smart money? The smart money is used by the institutions. The smart money is used by the banks. The smart money is used by the smart traders, which are the pro traders. They are working for the companies. So when they invest the money, they always invest money on the analysis. Okay, so with the volume analysis, we can understand where the smart money invested. So if when the smart money invested here, if we just get the example that if the smart money is invested here, the trend will go longer in up direction. If the smart money is traded here, the trend will go so much down. So with the volume analysis, with the volume help, that we can understand where the smart money is traded. The smart money, when the banks and when the institutions, the big institutions, they always use the smart mind. Okay, the smart analysis in the chart in the market. Then they invest the money to earn the so much money. Okay, but this normal traders, they don't use this type of approach to understand where the smart money is invested. They just to follow the some patterns and some candles and they invest the money. But the smart traders don't follow these type of information. They analyze so much more, then invest $1 million on that level. So we have to analyze the smart money also with the volume analysis. And there are so many other things. But here in the binary option, we are trading, turbo trading, the 1 minute trading. So we don't need to go in the smart money options, smart money analysis. We just to understand the 2 candles, 3 candles, or the group of the 5 to 10 candles, to understand the volume analysis, with the volume analysis, that how we can place and where we can place the trade. So in this course, I will give you the analysis between 2 candles and analysis between the group of multiple or the 5 to 10 candles, that how we can understand that now the market will fall here from here, or market will rise from here. There are some signs, that these signs, then you can understand and you can place the trades in the volume. Okay, so here now we can understand here about the volume, that volume is a units. Our volume can be traded with the tick volume. When up and downs move, to find in the candles, the volume is traded in the up and down moves. That is a tick volume. In the Forex market, both volume can be counted, the units and also the tick volume. But the concept of the tick volume is all the traders know about the tick volume. They are saying that in the Forex market there is a not real volume, so they just following the tick volume. But insidely there are 2 types of volume: the units, traded in the units, and traded with the tick. Okay, tick means up and down. When candlestick up and down, price up and down, the volume is traded. Okay, so that is a two type of volumes in the forex market, but we are considering the tick volume here. Okay, so now here we understand about the volume and the price, that price moving in a direction, and volume also give us information that this direction is a false or this direction is a true direction. So it means we are comparing the two things, the price and the volume. When we compare two things, that we can understand that move is a false move or that move is a true move. When the true move we found, we can continue the trades. When we false move found, we will reverse the market. It means we are trading the reverse. So here, if the move is false, we can understand with the volume, then we can place a put option here. If the move is right, then we can place a call option here. If this move is right move, then we can place a call option. It means the study about the true and false move in the market, we have to understand in this course. So all with the two candle analysis, with the group of the candle analysis, with the trend analysis, in this volume analysis, volume spread analysis course, we will learn all these things. Then how we can understand these things and how we can place the trades with the volume analysis. Okay, so here on the slide, I'm going to show you something. So our course is depend upon these things. These are the topics. We understand about the volume and the price, and then the VSA, the stages, there are the stages of the VSA, the accumulation phase, the distribution phase. These are the two stages, and these two stages, markup and markdown. We must understand about the market trend. As you know about the, you are the price action trader, and you know about the waves, that waves are moving in the direction. Okay. Just for example, I'm showing you these waves moving in this direction. Okay. So in this wave, you will find so many reversal patterns. Okay, so many reversal patterns. Then you can understand the market will fall from here or market will go rise from here. But with these patterns, with the volume analysis, we can understand more. It means their volume analysis is a filter of your price action. If you are 50% a successful trader in the price action, the volume analysis will increase 30% more. It means you will be a 80% price, 80% trader, successful trader. So volume will give you the hint, the filter that this trend movement from here to here is a false movement or the true movement. If the false movement, the market will rise from here. If that is a true movement, the market so much go down from here. If the false movement, the market will again goes in up direction. So these are the movements you will understand in the volume analysis. So these stages shows that how the market accumulate, always accumulation come for the buyers. When after a downtrend, you will find the some little bit range. So that little bit range is the accumulation. Where in the price action, we are saying that is a demand. The demand is creating by the buyers. So in the volume analysis, we can say that is the accumulation by the buyers and sellers. So the market is accumulating. It means the demand is increasing. So this demand increasing when we consider that is a testing area in the volume analysis. So this testing area, we will understand that in the volume analysis, we can understand the breakout of this level, when it will be happen and which will be benefited with this breakout. The buyers will be benefited or the sellers will be benefited. In the accumulation phase, we can understand the breakout will from the downward or breakout will come in the upward. Okay, so then after accumulation, we will find the markup, that how much trend is going in up direction. So when the market is going in up direction, we can consider that is a markup. Markup, it means market is going in up direction. And then again, after when the trend is going, trend will change the position. So this position will be changed in this type of range. In this range, we can understand that is a distribution or not distribution. So in the distribution phase, we will understand now the sellers are getting strong. They can break the market from this range to down or not. In the volume analysis, we can understand this testing area, we can understand how the market can accumulate or distribute the buyers and sellers. So this testing area we can understand in the volume analysis. So when the market break out this level, it goes down. So that area we can say the markdown. Okay, in the markdown, so that is a markdown. So now we understand the four areas: the accumulation area, the distribution area, and that is the markup area, the markdown area. In these four areas, these all application we will apply by the VSA. The SAO concept, sign of weakness, and the source concept, sign of strength. So in the accumulation, in the markup, in the distribution, in the down markdown, in these stages we will apply these all concept, the SAO concept and the source concept. The SAO have 9 concept and source have 9 concept. These 9 concept, total 18 concept. These are the 18 strategies. These are the 18 signals. When these signals appear in the market, we can understand the market movement. The market will move in the up direction or market will move in the down direction. So the understanding the price and the volume is necessary. After understanding the price and volume, we must understand about the accumulation, distribution, markdown, and markup. These 4 stages are very important to understand. After understanding these 4 stages, then we will come on the SAO and source concept. This is a sign of weakness, where the sign of weakness will come and how we can recognize that is a sign of weakness. The sign of strength, how we can understand where is the sign of weakness in the trend, in the wave. So all the things will cover in the 2 waves. That is the impulsive wave and the correction wave. We can say the reactionary or actionary waves. So in these waves, all the concept we will find here. Okay, so how we can apply these SAO and source concept, I will teach you in this course. These are the signals. Now these are all the signals. In with these signals I'm trading. You saw my results. These are the signals. In these signals you will trade. When you understand all the signals, you will trade. These are the sure shot signals. Some signals are immediate effect, some signals are change in near future. So here we understand 2 things. After appearing the signal, you will find the immediate reversal. Okay, and then you find the in near future. In near future, you will see the effect. So 2 effect we will see in the with the VSA analysis. These all the things will increase your winning ratio. And after that, after understanding these all topics, all education about the VSA, then I will teach you how to apply these all the concept in the market. After getting any sign of reversal or sign of continuation, that how we can apply. When we are in the chart, that how we know now we can place a trade or not we can place a trade. So these things will give you in the chart, in the volume analysis course, and you will understand that is the markdown area. In the markdown area, these 18 concepts are coming or not. You will understand this concept, then you can trade. That is a accumulation area. In the accumulation area, you will understand, after understanding the accumulation, that the market will break in up direction or not. So that is also, these are the waves. In the waves, you will find these all volume analysis sign, volume analysis signals. That these signals will give you the entry points. Okay, so here, and then after before this course, there are 2 things there to understand is very important. I'm going to do those things. Okay, first, if you are IQ option trader, then how you can plot this volume analysis indicator, just to learn from here. Okay, you go in the widget session, there is the volume. Okay, if you disable, the volume is now not showing here. Okay, if you enable, you will use this type of volume. Okay, so this volume shows, okay, in this candle. If I stop the cursor on this volume bar, in the left side you will see 226 tick are founded, are the 226 units are founded in this candle that traded. Okay, so these you can understand from this bar to this bar there is a difference, this bar there is a difference, so each bar have a difference. So you can understand from this chart, this oscillator, you can say that that is also oscillator. Okay, but to understand before, there are two main things to understand here. I'm going those to give you understanding about these two things. These are two main things you understand. Okay, these are validate and anomaly, two terms in the VSA. When you are analyzing the chart, you must know about these two things. These are very important, the validation and anomaly. The validation means is that something, the price and the volume bar is validate to each other. It means authenticate to each other. That is a proof that everything is going correctly. So if the volume and the candle, these two things are matching to each other, then we can say that is a validation sign of continuation. If the price bar is so much smaller and the volume bar is so much bigger, it means these two things are not matching to each other. There is a difference between two things. That is a sign of anomaly, something abnormal, something not matching to each other. So here we must compare two things, the price and the volume. So when the price and the volume we compare, then this comparing of the two volume and price, it gives the signals of the trading, the continuation signal and the reversal signal. These all the studies are consist on these validation and anomalies. So anomalies and validation are very important, as a price and volume to understand is very important. So validation and the anomaly is very important in the VSA course. So before starting, we must understand about the validate and the anomaly. So how we can validate, how we can note the anomaly. There is an anomaly. Anomaly means abnormal. Okay, in this slide I'm going to show you and clear you about the anomaly and the validation. So these are the anomalies and validation. Look at the chart. If the price candle, so in the volume analysis, the candle body is a spread. Okay, so spread, when price opens and close, this area shows a spread, the wicks not. Okay, only just a body. So we count only bodies. Okay, the body is a spread. Now here, if the body is bigger, the volume must be bigger. That is a sign of validation. It means this price and this volume authenticate to each other. If we compare these two things, these two things must be matched to each other. When matched to each other, we can say that is a validation. When validate come, the sign of continuation, market will go more up. This bar, volume, price bar and this volume bar validate to each other. Candle is small, volume is also small, validate to each other. This candle validate to each other. It means the volume and the price must validate to each other, must match to each other. Then we can consider the market will go in the continuation phase. The next candle will be appear in the green or in the red as per the candlestick which you found. If the green candle you found, the next candlestick must be green. If these both things are matching to each other. And then in this anomaly session, look at the price bar is so much bigger, but the volume bar is so much smaller. So Now we can compare these two things are different from each other. Same, this candle is a bigger candle, but the volume is similar. So that is a sign that there is an anomaly between two candles. These two results not matching to each other. So that is a sign of reversal. So anomaly is a sign of reversal. Validation is a sign of continuation in the market. Here, this bar is a very, very small, but the volume is so much high. It means why? There is a anomaly, there is a something abnormal, something wrong, you can understand. So that is a sign of reversal. That is again sign of reversal. So in this combination, we must add one thing more here. That thing is this result. Effort in the VSA, that is the law by Wyckoff. Okay, so Wyckoff created this study about the VSA, and Wyckoff wrote so many books on the VSA, and he started in the 1900s. From there, the volume is traded. So in this rule, the effort based result, it means we are comparing the two things. The volume is an effort. All the time, the volume in the market is an effort by buyer or sellers. So if effort is high, then price, it means the price is a result. The result must be high. If the effort is low, then price must be low. But here price is, result is high. So there is an anomaly. So you can understand from this law that effort and result must match to each other. If there is something wrong with effort and result, then you will find the reversal. If effort and result matching to each other, that is a sign of continuation. This trend will continue, the next candle will continue in the same direction. So effort, we are analyzing the effort and the result in the chart. Always in this chart, look at. So that is the effort. The volume is the effort and that is a result. The volume is the effort, that is a result. So here, in this case now, understand, this candle have this type of volume. It means if we consider these two candles just, so this candle have a larger spread as compared to this candle. So if larger spread, it means larger result and this type of volume. So why this candle have similar body and volume is high, effort is high? It means there is an anomaly. When you find the anomaly, you will find the green candle. So as compared to the previous candle, this shorter candle have this type of extra large volume, and this larger candle as compared to the previous candle, this volume is less than the previous candle. There is an anomaly. Again, you will find the reversal here. So these type of anomalies and validation we will find in the chart. So these validation and anomalies we can compare with the two candles. We can compare with the multiple candles. So multiple candles, it means these are the four. Multiple, we can count the 10 candles. We can count the 5 candles. We can count the 6 candles. In the way we will count the candles, multiple anomalies. So I'm going to show you some example about the multiple anomalies. Okay. Here. So these are the multiple bars, multiple candles. When the trade, you found the candlestick increasing the size and the volume is also increasing. That is a validation. When candlestick rise here and the volume also rising, that is a sign of validation. It means this trend will go longer. That is a sign of continuation. This trend will go more longer. But in this trend, the same scenario of the candles is going in up direction, but volume increased with 2 candles and then decreasing. That is a sign that you will find the near future reversal. That is an anomaly between the trend So if the price is increasing, the volume must be increased. If volume not increasing, there is an anomaly. It means this trend will no longer. In the near future, you will find the reversal. In this case, the trend is going down and volume slowly increasing. That is a sign this trend will continue more down. That is a sign of continuation. But in these same candles, the volume in the two candles increased and again it's decreasing. When decreasing, it means there is an anomaly. There is something wrong in the trend. So that effort is not matching with this result. So we are analyzing here the effort and the result. So always in the VSA, we analyze two things, effort and result. So effort must be matched with the result. That is a sign of continuation. If effort is not matching with the result, then there is a anomaly and we will find the reversal in near future or immediate. So there are some signals which give us a immediate effect and some will give us a in near future. So there are so many signals. It means 18 signals. There are more about the 18 signals. I will clear all the signals in the chart. Then you can understand and then can take the entries. So just to analyze some more candles here. If we compare these two bars, so it was showing the higher the result, the higher the volume, higher the effort. It shows there is an anomaly. It's not, anomaly, okay, it's a continuation. But here we found this type of support resistance. So volume where increases in the market. Volume increases on the support and resistance. When you find a support and resistance, the volume must be increased on the support resistance. That is a sign of reversal. In the volume analysis, when the price reached to the resistance or on the reach to the support level, the volume increased. That is a sign that market can reverse for 1 minute or 2 minutes or for some time. So this concept also we will learn in this course. And then to understand here just more. So if we are comparing these two candles, if this spread have this type of volume and this shorter spread, the volume is looking like that the volume is lower than the previous candle, but the spread is very shorter. That is a 10% of this candle, this spread. That spread is a 10%. So if the 10%, then volume must be 10%. So then it will continue more down. But here the spread is 80%. The volume also 80% from the previous volume. That is a sign of anomaly. We will understand all the concept of about the anomalies and validation. Then we can find the entries that market will go in up direction or not. Okay. So once again, we found more anomalies in the chart. The main signal in the VSA, if you find the inverted hammer and the volume increase so much, that is a sign of reversal. In the uptrend or in the some green candles, if the inverted hammer you found and volume increase so much, that is a sign of reversal. You will find the next candlestick will goes down. Inverted hammer, volume increase from previous candle, the next candlestick will goes down. So this type of analysis I will give you. And in the start of the trend, when you find the sellers are getting weak and then you found the inverted hammer and the volume is increased so much, that is a sign of continuation. These type of sign I will teach you in the VSA course. These type of, you will find there's the up thrust and that is a no supply bar. These concepts you will learn in the VSA, that then you can understand the 1 minute, for the 1 minute market will go in up direction, or for the 5 minute market will go in the up direction, or for the 15-minute market will go in the up direction or down direction. So these are all the concepts which you will learn in the VSA course. And after that, there are some strategies. Okay, this meeting is now going to finish in 2 minutes. I will send you another meeting ID, then again join with me. Okay, I'm sending you once more link, okay, and join me again.